Welcome to today's video. We're gonna have a look at Intel. I think there's a more than realistic opportunity and possibility for Intel to be a good investment if you have a 5 to 10 years horizon. Now, I think everything comes down to one single factor that we will discuss further down in the video. And by no means I'm just saying that you should go and invest all your precious money into Intel. This is a risky bet, but I think this is a bet that if you continue to follow over the coming 2-3 years could possibly pay off further down the road as we get close to 2030. Now, to be honest, I have to be honest that I have been a mega Intel critic over the past, at least since 2016, where I started to invest in their main competition, AMD. At this stage in 2015-16, I think Intel was clearly stagnating and kind of becoming way too, let's say, way too overconfident. We know that, for example, I read this post here on SemiWiki from account called Hist78. I think this is a very good point. Essentially, from 2016 to 2019, while TSMC was buying EUV machines, the EUV machines from ASML that we've discussed on my previous videos, Intel spent almost 30 billion on external acquisition, one of them being Altera, which they now are essentially going to sell. They are preparing the company to be sold off. Altera is doing business in FPGA field, which also AMD is doing with their Xilinx purchase a couple of years ago. So they spent 30 billion on external acquisitions like on the likes of Altera. Then they spend 27 billion on stock buyback and another 21 billion on dividends. While in the meantime they could spend that money on purchasing EUV machines in order to compete with TSMC, as TSMC were like executing on newer, better manufacturing nodes that Intel was not doing. They were busy doing all the acquisitions, all the dividends, and all the other stuff that essentially didn't pay off when they were facing threats from let's say AMD on the design side and also TSMC on the manufacturing side. Also in this time they kind of forgot about the GPUs where Nvidia was laying the foundation for the dominance that they now have. So I think the mismanagement was epic. You could in fact argue that Intel's failure over the past decade has more to do with themselves. It's not a case that TSMC executed so well and Intel also executed well, but TSMC was executing even better. It's a case of TSMC, AMD, and Nvidia all executing well in their each area, and Intel essentially dropping the ball and chasing dividends and share buybacks to satisfy upper management. So I think that's the issue with Intel. So this is why I have not invested in Intel essentially until recently. I understand that I made some videos recently that I speak about maybe we are at the potential in the deep valley of essentially fear and about the Intel stock price. I understand it. I think I'm not by no means again saying that you should go in and invest a huge amount of your portfolio in Intel. What I'm trying to discuss that I think there's a realistic more than a probable realistic opportunity for Intel to succeed here. We know that the American government is in desperate need to have at least one manufacturing company in the US and also in the Western world. We know that TSMC is based in Taiwan and there's a huge geopolitical risk to that. So I think if you consider the single fact that the American government will continue to support Intel, I don't believe Intel will go bankrupt in the upcoming 5 years. And in that scenario, we know that Intel is right now trading crazily low, and it's deservedly so. I'm not by no means saying that Intel should be valued more than the 80-90 billion that it is right now. So that's obviously not the case, but I'm saying like in the future, if they manage to execute well on their manufacturing capability, which we will look at further in a couple of articles, we will see that maybe there's some initial signs that they will actually manage to close the gap with TSMC, and maybe they have already done to some degree. So I think that's where I'm coming from. I'm not coming from that Intel will be able to stop the bleeding in data center sales, in the general purpose CPU data center sales. We know that AMD, their main competition, has been getting some nice traction in their data center sales. So that's not gonna disappear, and AMD is really in a strong foothold right now. We also know that the client computing segment for Intel, which is their laptop CPUs and APUs for Dell, Lenovo, HP, and all the others, is also facing a larger threat, not only from AMD, but also from ARM and Qualcomm in the first stage, but most likely next year, possibly even from Nvidia venturing into those areas. It's a speculation, but it could be, there's definitely more threat for the data center, for the client computing. Intel's foundry service is, what's gonna save the company, and this is essentially, if they manage to execute on the foundry service, they will definitely be able to also get a nicer market position in the client and the data center segment. And we still haven't, mentioned a whole lot about Intel's data center GPU, which Nvidia is dominating, and AMD is in a second strong place. So yeah, it's let's wait and see for that segment. So we mentioned that they spend a lot of time over the past 6, 7, 8 years to do stock buybacks and maybe not necessarily acquisitions of the companies like Altera. And now the question is, where do we see Intel going in terms of their manufacturing capability? So as you can see here, I think this is a really interesting look at it. So TSMC is the red one and Intel is the blue one. Again, the story over the last 10 years has been that Intel was in the lead as we were at Intel 14 nanometer. And then as TSMC started to look at Apple as a big customer, and also Huawei, and essentially all the mobile phone manufacturers. In the mobile space, you need small chips. The mobile, your cell phone doesn't need a huge chip like your laptop or your desktop computer, or let alone your server CPUs that could be 5 to 10 times larger in terms of area. And that specification of following the mobile market, which not only used to become larger and not larger from middle of the 2000s until now, and most likely going into the future, the demand for the mobile would increase more compared to, let's say, the demand for the larger laptop and desktop chips. So more people were being satisfied with their iPads and their iPhones than needing a desktop computer or a big chunky piece on a big chunky laptop. So that's where TSMC started to optimize for smaller chips, and in doing so, it's physically easier to produce smaller chips than bigger chips in the semiconductor industry. I don't want to go into the details why that is, but you should take it for a fact that the smaller the chip, the easier in terms of yield and the less defects that can affect you. So you get essentially more good chips per unit of manufacturing capability, based on the chip wafers. And that's where TSMC started to eat into Intel's leadership. And as Apple grew, and Huawei and Sony and Samsung, TSMC started actually to take the leadership, and Intel struggled really with the Intel 14 and 10 nanometer. They didn't use the EUV machines from ASML. Again, all those close to 50 billion or even more that they spend on acquisitions, dividend and stock buybacks, they didn't spend on EUV machines. These are very important lithography machines that you need as you go down to the finer and finer nanometers. And TSMC started to use those machines I think in 2019. I think the first TSMC fully manufactured node was one version of their 7 nanometer with EUV. So Intel actually ventured into EUV manufacturing late last year, I think. That's their first volume production, which was based on Intel 4. So you can see that Meteor Lake, I think this is the first Intel EUV node. So that says quite a lot. They underestimated the need for EUV, but as we go forward, you can see that I've marked the high NA EUV. This is essentially, let's say, the next generation of EUV machines as you go even further down into close to 1 nanometer and below. And Intel will actually this time have the first edge ahead of TSMC. and in the previous case it was the reverse. And so yeah, that could possibly be helpful for Intel, but you shouldn't, just assume because you have the first access to the second generation EV machines, that Intel will be granted to be the victor here. Because if I remember correctly, Samsung actually was ahead of TSMC in utilizing the first generation EUV, and we all know that how that went. TSMC was performing much better than Samsung foundries. So it doesn't necessarily mean to you have to be first in order to be the best. TSMC wasn't. They were ahead of Intel, but not Samsung. But they still executed better than both of them. So with all that considered, I still think that's at least one step that's required. Doesn't guarantee it. It's the second generation EUV machines, and we will see that Intel is first out with the 14A process late next year, and maybe volume production in 2026. Now the question is, so here for example, one headline is saying Intel hits a key 18A node milestone, will challenge TSMC in production of next gen AI server chips. So if you read this article, you get a feeling that Intel is doing fairly good. They already taped out one product, I think actually two products that's based on Intel 18A. One of them is the server product, let's see, called Clearwater Forest for next year. And the other one is a more consumer kind of product based on Intel 18A, which is Panther Lake. And Panther Lake is for the mobile laptop CPUs, which will be the successor to the hugely awaited Lunar Lake that will be available in just, I think, a month or two. And Lunar Lake, I think, will definitely be good for Intel. So yeah, from that article you get the sense that maybe things are going in the right direction. Then you read this article, came out just yesterday, a couple of days ago, Intel 18A under fire, struggling yield, skepticism, and race against TSMC. So from an outsider point of view, it's very difficult to know what is right and what is wrong, how well it is going. I do believe that Intel is more competitive with TSMC in 2024 and 2025 than they were from 2019 to 2023. So the gap is reduced. We also know that, why do I say that? Where, for example, if you go to the server, so on the server side, Intel's main competition is AMD, right? And if you go back to 2022, Ice Lake, Intel's 20 core and 40 core CPUs were competing against AMD's Milan and Genoa at 64 and 96 cores. Now granted that not each core is created equally, they differ in different workloads, but still I'm very confident that AMD's Zen 3 cores were much more efficient and productive than Intel's Ice Lake based cores. But then in 2023 you started to see that Sapphire Rapids closed the gap somewhat. Not as bad as in 2022 compared to AMD, but still AMD had a clear lead. Now the interesting part in 2024 is that AMD still has the lead, but the interesting part for Intel is that the Intel Sierra Forest, so their Xenon 6 lineup based on Intel 3 with 144 Crestmont E cores. Now remember, Crestmont E core is kind of the same kind of core that you see on the consumer side in Intel's Meteor Lake that launched late last year. So if you go back to 2023, Meteor Lake have Crestmont E-core based on Intel 4. But this Crestmont E-core that I'm talking about is based on Intel 3. So it's a updated node, essentially 10-15% better, I think. And that's more for server use cases. And if you read the reviews, Crestmont E-cores they're doing good. In some workloads, they're definitely winning against AMD's equivalent of, Genoa, Bergamo, and Siena. But with one caveat, AMD still seems to, on average, have, let's say 10, 15 to 20% lead. But Intel is doing a good showing with, the Sierra Forest. But also the other caveat is that AMD in a couple of weeks or a couple of months will launch their Zen 5 based Turing server CPUs. That will obviously extend the lead. But then again, very closely after that, early next year, I think we will see Intel's Clearwater Forest based on Intel 18A, which I think, then that's gonna be really interesting. I think there's a possibility that the gap will be closed, or at the very least, it's gonna be a situation like this year. Right now, before Zen 5 AMD CPUs are launching for the server use cases, where Crestmont E-Core in Sierra Forest here, this one is essentially doing, stabilizing the bleeding for Intel against AMD somewhat. AMD still has the lead, but it's much more on an even footing. Next year, if Intel 18A turns out to be as good as this article says, it could be a case where Clearwater Forest, the successor to Sierra Forest, is gonna maybe stop the bleeding completely and in some workloads. So again, everything, I mentioned that Intel, the stock is taking a hit, essentially over the last 15, essentially almost 2 decades. Everyone has lost money on this stock. At best case, the stock hasn't moved anywhere in more than 20 years, since 1996 if you look at it. But worst case scenario, if you purchase, like, let's say, here in 2018, 19, 20 and so on, you're underwater at the same time that your main competitors like Nvidia and AMD has in some cases 5 to 10x since then. So investors lost a lot of money, and I want to be very clear. I'm not saying that you should go in and buy Intel and hope that it's gonna be the same scenario that AMD in 2016, where the stock went from around $2 to now 160 or something. That's not what I mean. But I'm saying that if you buy Intel now, you're buying a company at below 100 billion US dollar market cap, around 90 billion US dollar market cap, which is essentially being traded, as this gentleman here says, they are being traded at very low valuation. Now, granted that they will possibly lose even more money, but I think Intel at this valuation offers if they manage to execute well on the Intel, very importantly 3 nanometer and 18A, they could possibly take the lead against TSMC. I've read on the SemiWiki forums and other spaces as well, trying to figure out, for example, we know that Intel 3 seems to be somewhat in between TSMC's, let's say, 4 nanometer. I would say Intel 3 is better than TSMC 4 nanometer on average. Now, when I say TSMC 4 nanometer, they have different, like 4P, 4N, and all different 4 nanometer variants, tailored for different use cases. Some of them are for high performance computing, some of them are for mobile application and low voltage and low power. So it's difficult to say which 4 nanometer. But I would say that Intel 3 is between TSMC 3 and TSMC 4 nanometer. So they are behind TSMC, but we know that TSMC also struggles a bit with their 2 nanometer process. I think originally it was planned for this year, but now it's delayed for next year, launching with Apple's next year iPhone 2025 iPhone lineup and their equivalent A series chip. I think that's A18 or A19, what that could be. So we know that that's gonna be when TSMC 2 nanometer goes into manufacturing process. But the interesting part with Intel is that with 20A and 18A, they're gonna introduce backside power delivery and some sort of gate all around transistor, together giving this is the next evolution besides shrinking the node. So this will affect the power delivery and efficiency of the transistors. And TSMC and Samsung, I think, at least on the backside power delivery, will kind of go that route as well. But especially TSMC, they're gonna be like 1 or 2 years behind Intel. It's not to say that TSMC is behind Intel. It's maybe they just decided to introduce that technology a bit later. Maybe they are so confident with their standard 2 nanometer that they don't need backside power delivery. But on the other side, for Intel's case, I think this article, or actually this piece that I read, is very interesting. Let's see if I can find it there. So according to this one from TechFound, one of Intel's previous executives had a really nice point. They are talking about, for example, here they say that, let's see. So in that case, if they make a device much more compact, they are talking about TSMC, because I mentioned in the beginning of the video that they are tailoring and optimizing their nodes mostly, at least in the beginning, for the smaller Apple chips. And as we go into year 2 and year 3 of TSMC's each node, that's when you see AMD and Nvidia and other companies use that same TSMC node or equivalent or some derivative of that node in larger chips for servers and laptops and so on. Whereas you can always see that most of the time Apple is the first customer on each new TSMC node with their smaller iPhone and iPad chips. And that's to do with yields and everything. So, but the interesting point from this text here is that if TSMC is tailoring and optimizing for smaller chips, whereas Intel is optimizing for high performance server stuff that draws more power and so on. And because of that, the actual physical design of the transistor in terms of the applications that TSMC is optimizing for doesn't need to be as as big as the one that Intel needs. I don't know the physics behind it more than it has to do with the dielectric material in the transistor, and I think it's something to do with the insulation and all those kind of electrical properties of the material in the transistor. Because if you need higher voltage, then you need obviously higher, I guess, security and thickness of the material. We don't need to go into the engineering behind it, but so that it's not necessary to say that TSMC is ahead of Intel either. So it depends on what kind of application each node is tailored for. So that's that's gonna even make it even more interesting. We also know that Intel's Arrow Lake is gonna be launching in October the 17th. That's gonna also, especially with if you know that AMD launched recently on the consumer side Zen 5, and Zen 5 didn't get the best reception. It's good, but it's not the same level that most people were expecting. It opens an opening for Intel to be fairly competitive also on the consumer side again. So if we go back to the revenues, you can see here that, I don't know, these are just guesses, but I think the client computing and data center, the rate of bleeding compared to AMD is not at the highest right now, I would say. I think the highest was in 2022 and 2023, and now going forwards, at least next year, I'm a bit more confident on Intel. AMD is still the favorite, but I think Intel is going into next year and late this year with better products. So starting to summarizing this video, I think again, it's all about opportunity and betting on Intel manufacturing capability. If they manage to do that, the company will most definitely survive. And in that case, in that scenario where they're executing very well, they are much more on an equal footing with TSMC 2025, 2026 and onward. You start to see the other big companies outsourcing their manufacturing from TSMC to some degree to Intel. I'm talking 2027, 2028 with Nvidia and Broadcom and others. There's the 89 billion market cap for Intel right now is in that scenario very cheap. And this is what I'm saying, I'm not saying that you should put your life's investment in this, but maybe 1% or whatever you feel confident with. Again, this is not investment advice, but that's where I'm coming from. And I think if you hold a gun to my head and ask me where will Intel be in 10 years, I think this company will survive because they have the US government behind them. There's no incentive for the US government to let Intel go bankrupt. They seem to invest and burn a lot of money right now, but it's because the 5 nodes in 4 years thingy that they had, where Intel would essentially execute and develop Intel 7, Intel 4, Intel 3, Intel 20A and Intel 18A in 4 years and compete with the TSMC. And before we finish the video, it's very important to mention that I haven't mentioned one other thing. So look at this. Sure, TSMC is in some degree still ahead of Intel, right? Especially on volume capability. But who are Intel's competitors? Well, on the CPU side, it's AMD, right? And if we go on the server CPU side, you can see that Zen 4 is based on Intel 5 and 4 nanometers. So that's interesting. That's not on TSMC 4 and 5 nanometers. So that's very interesting because it's not on the leading edge, 3 nanometer. I think Zen 5 will be on 3 nanometer for the server, but not for the consumer part. So if Intel's own products will be on Intel 18A from next year and onwards, you could possibly have a advantage compared to AMD, because they have then, you know, the better node. If AMD is mostly on 4 nanometer and to some degree on 3 nanometer, whereas Intel is on 18A, especially on the consumer parts, I think that's gonna, you know, stabilize the bleeding for Intel a bit. But again, it doesn't matter what they do on, you know, the consumer client group or data center. The only important thing here is Intel Foundry Service. And the good thing with that is if you take a bet on Intel now, you should have the answer by late next year. If Intel 18A product seems to be competitive with TSMC, I don't think Intel will let go of the gas, and you start to see some change from customers, actually outside customers coming to Intel. But yeah, so I think that's gonna do it for today. Sorry for extremely long video, but I needed to clarify my position on Intel. And after this discussion, I do think that, you know, I'm still extremely bullish on AMD despite this video. So you know, I'm most confident on AMD still. But yeah, Intel is an interesting position right now. 90 billion US dollar market cap, could definitely go lower now. But you know, who's to say that you couldn't, you know, DCA on a long-term basis, maybe once every quarter you buy a certain amount and then you see how it goes. But again, I want to clarify, this is not investment advice. I'm just sharing my thoughts and idea. So thank you for watching the video. Please like, subscribe and comment, and see you in the next one.